Hi and welcome to Trade of the Week. This week my personal trade of the week was a long bet on Euro Sterling, but that's been pretty well covered in the TA pieces. So instead I've chosen to trade in Euro Yen because it shows a completely different entry setup to the one I've been showing over the past couple of weeks. The Euro caught my attention when it held its ground despite poor ZEW figures, bouncing off a lower Bollinger Band at 131.20 on the daily chart. Often, if a market survives bad news, it's preparing for a move higher, and that's what I was looking at in the Euro. But first, I needed to identify a good entry point. There are two ways of joining a rising trend, either by buying the break above resistance, or waiting for a pullback to get in at the lower level, and that's the version I chose, even though it meant discarding my trusty RSI and moving averages that I usually use. A lot of seasoned traders use our old friend Fibonacci to identify a potential pullback, especially if they prefer to leave a limit order. And the most favoured level is a 50% retracement of the recent move. In this case, I was looking for a pullback of 50% from Monday's low to Tuesday's high. Show you this one. There we go. I set a limit order to buy £5 of Euro Yen at 132.52. This is shown more clearly on the 30-minute chart. If I'm using a specific level to enter a trade, I want to leave enough room for the temporary overshoot, but without getting tonked if support fails to hold. I reckoned a 25 pip overshoot was plenty, so I placed my stop loss at 132.27. I set my usual 30 pip target to sell £2 at 132.82, aiming to bring my stop loss up to break even at that point. Using this Fibonacci method of trading, my second target was far more straightforward. The cunning plan being that if Fibonacci retracement works as support, then the price will return to the previous high. So I set a limit order to sell my balance at 133.70, just below the previous high. Let's show you that one as well. There. And the outcome? Big hand to Fibonacci. The trade worked a treat. My first order was triggered to sell £2 at 132.82, and then the price shot swiftly through the 21 period moving average. See how the price passes cleanly through the central line and then it carries on to hit or even penetrate the upper Bollinger Band. So once it goes through here, it shoots straight up to the upper band. My target price was hit at 133.70 with a few pips to spare. So that was 30 pips on £2 plus 118 pips on £3, making an overall profit of £414 on the trade. Just out of interest, my usual moving average strategy wouldn't have put me into the trade until 133.03, 10 pips above the moving average crossover. So that would have been there. Now admittedly I could have run this trade a bit further, but neither the parabolic curve nor the 21 period moving average setups would have made an awful lot of difference to my exit point. Perhaps another 20 pips or so. Have a good weekend.